Okay, so for my VOCL community, I decided to start an entirely new, fresh thread of analysis for this ticker, as I do see some signs of potential growth here. But I want to go over the macro timeframes all the way up to the shorter timeframes for their potentials, right? So let's just go ahead and get this started now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a VOCL technicals, raw price action, and statistical thread of analysis on this Sunday. Happy Mother's, by the way, everybody. I'm actually at a Mother's Day event right now, and I just had to come and provide for the community real quick. All right. So before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, you guys. So we are looking at the monthly chart here for VOCL, and I want to express a couple things here. Please notice how this indicator, sorry, represents accumulation and distribution, right? So accumulation meaning that we accumulate as we go up, right? We distribute, we accumulate as we go up, and we distribute, right? So I'm not sure if this is a very heavily shorted stock, which I actually do think it kind of is, right? Due to the fact for what you're about to see next. Okay, so please notice this. Okay, so how much distribution can there be right to this tiny bit of accumulation that we got during this massive run up, right? So what I want to notice, what I want you to notice here, more importantly than the speculative facts here, is the fact that we're actually now on our way back up, right? So this is reaccumulating yet again. And it's and I mean this is a very, very significant upside on the accumulation index, right? So this is a very good thing, and I do see this as correcting all the way up to the top fairly soon. But please remember that we are looking at the monthly chart here, okay? So it's relative. Okay, you guys, so another thing to kind of look into here is that I paired or I versed accumulation distribution versus money flow and stochastic momentum. I want you to notice here on the histogram, the bars in the back, right? Please notice how the bars in the back are actually accumulating, right? So that usually means that there is a disbursement of returns inbound. Okay, so meaning that there is cash coming into the asset. Another thing you should notice here is that the stochastic momentum indicator is starting to make its curvature, meaning that the bear trend could be at a low, or potentially they found their target, right? But remember, again, it is the monthly target, right? The monthly chart. So this would essentially take a lot of time for it to finally realize its true upside, right? So now I want you to notice that the stochastic momentum is represented by a spectrum line, right? So you can see that it turns, yellow, green, it turns into cyan, it goes into blue, right? So what I'm trying to say here is that whenever we are on this ascent here, it appears to be that when we reach that minus 38.35%, that's kind of where we start to get that green, cyan, blue kind of look. And so we're going to keep an eye on the monthly stochastics, right? So by the time we do reach there, we should be kind of manipulating our colors into the green. Okay, so and notice that the stochastics are correcting, and also money flow index is showing inbound returns, right? So this is good. This is very good. Okay, so let's move on to the next chart, as I have several more things to go over with you. And stick around for the statistics, because the statistics, which I believe are on the fourth, actually, let me see. Yeah, you know what? We're going to go ahead and put it on the third slide. I think I could squeeze it in there. Okay, so it's very important for us to look at the statistics, because I did run a very large back test on the 6-hour time frame. Okay, you guys, so let's go ahead and move on to the next chart here. And please notice that the MACD on the monthly now is starting, well, first of all, please notice the histogram losing all kinds of bear pressure here. And in fact, we're looking like we want to prepare a potential cross upside of the moving average, right? So as soon as that MACD line starts to, the MACD signal line represented by the blue line starts crossing above the moving average, this is going to be great, you guys. So there could be a potential upside being prepped as we speak. Okay, so let's move on to the next chart here. And actually, you know what? Yeah, okay, screw it. Let's just go ahead and talk about the volatility versus momentum backtest. Okay, you guys. So this was a very, very big backtest. It did take me a couple days here. This is why I didn't release the video over the last 2 days, is because I wanted to make sure that we in fact had all the data correct for this, as it is suggesting a pretty nice upside move. Okay, you guys. So anytime that volatility has contracted into critical volatility, which could be within the 15 percentile of this indicator, BBWP representing volatility, right? And it has, okay, so anytime that it has contracted and started an expansion phase to the upside paired with stochastic momentum with an upside pivot, I have taken note of every single iteration where that has happened, okay? So I have taken note. Let me just go ahead and zoom in just a little bit to give you some more context here, right? So, for example, on this iteration here, I measured from the very opening of that candle, which is when the firing of the signal happened, right? Upside momentum and critical volatility touch with an upside of the spectrum line and moving average, okay? So that is the condition. That is the absolute criteria here. Okay, so I measured the upside thrust based on that condition, the duration, and the amount of times that volatility versus momentum have guessed the upside correctly versus incorrectly. Okay, so these are the samples that I've gathered for a statistical backtest. Okay, so now this is the data set. Okay, you guys, so out of a total 65 iterations throughout the entire trading history of the VOCL asset and a 6-hour time frame, 47 have been guessed correctly to the upside, giving us an average upside accuracy of 72.31% with an average upside thrust of almost 92% over the span of just over 9 days. This is the proof of work here, you guys. So yes, we do have a mean of 91.78% with a standard deviation, if you're familiar with statistics, of 293.10%. What that means is that it's 293% of the results land within 68% of the bell curve, right, you guys? So the lower bound of the first standard deviation came in unusable because it was a negative metric, right? So it came in minus 387%. Of course, in statistics, we are not able to use negative values. That would automatically render it a 0% value. Okay, so now the upper bound of the first standard deviation is coming in to about 384.86%. So this is what I'm talking about. Okay, you guys. So I'm just gonna go ahead and draw it just so that we're all kind of clear about what the heck I'm talking about, right? So I'm gonna draw for you the bell curve, right? So something like this, right? And like that. Sorry, it's come out better before, right? So yeah, let's go ahead and now draw the center of the line, right? We're gonna draw the lower bound border and the upper bound border. Okay, so this bell curve, just please ignore this thing here, right? It should be just like this, a perfect curvature, right? So what we're looking at here is that the out of 91.78% mean, the calculation of the standard deviation comes out to, let's see, to 293.10%, which lands within the 68% of the results. This bound here. Okay, so we can go ahead and write there 291. Sorry about that. 290. Let's see, 293. Sorry, so many numbers there. Percent, right? So we'll go ahead and just write it like this, right? Now the lower bound we already know that is 0, so it's unusable. So we'll leave it there. And then the upper bound is 384.86%, right? So perfect. Okay, so now what this is telling us is that out of 65 iterations, 47 are correct. Okay, that gives us a 72% chance that we can make almost a 92% move on average, right? So the standard deviation, especially when looking at higher iteration counts, this really does start to kind of like play in for us, right? So that first the standard deviation lands within this 68% of the results. So we have a space to look at of 293.10% total upside, right? Now, if we were to exit this area of 210 or 293%, we do have the upper bound, which would give us then an additional percentage for us to evaluate in the event to where we do move beyond this target here. Okay, I'm not saying we're going there. I'm telling you just how the statistics kind of play out. But let's go ahead and take a look at the simpler metrics first, because obviously the mean tends to be more within our reach, right? So at least not speaking in absolute hopium here, right? So as I would like to just kind of present what the statistics are saying, and that's it. If you are a part of this channel, you know what I'm about. I tend to follow mathematics, and the data speaks for itself, right? So yeah, let's go ahead and apply from the current price action. And just to be clear, we haven't absolutely gotten the upside in everything just yet. Please notice that, yes, volatility is now starting to expand. That's a good sign. Another good sign is that we're about to make that volatility cross above the moving average, which would then influence the moving average for an upside. We need both the moving average and the volatility component pitched to the upside, just like this iteration here, right? This was the last correct iteration, and you can see that I'm very meticulous about that, okay? We do need both of them pitched to the upside, and it looks like it's about to happen. Okay, you guys, so when that condition meets, paired with stochastic momentum with an upside pivot, which, by the way, the 14-day simple moving average is now leading in to the bullish control zone. That's already good, okay? The EMA3 is about to enter there. It's in the gravitational zone of the bearish control zone. So a 93% or 91% move to the upside, almost 92, would put us to about 1660. Then that would be, let's see, yeah, very nice here. And that's also very much in confluence with the 3-spot 618 golden mean at 1600. So now that gives us a range of resistance. Okay, you guys, so now, of course, we want to take into account our 3-spot 272 as well at 1507. So lots of confluence happening there. Okay, let's move on to the next chart. I know this is going to be a little bit of a longer video, but it's important for us to look at it as investors. Here's the other sign that I believe we could be at a reaccumulation phase, right? So to the upside, look at this is the annual chart of the VOCL against the Gaussian channel. And notice how the mean band has been tested by our massive annual candle here. We came right back to that mean band and bounced out of it, just like we did right over here on literally last year. This is January last year, right? And this is starting from January all the way to December, and this is starting from January all the way to December, right? All 252 trading days is what it's taking into account. No weekends, no holidays, no nothing like that. Okay, you guys, so yes, we got that bounce from the Gaussian channel, and now we're suggesting a continuation to the upside. Very cool. Next chart. This is the weekly time frame. As you can see that I'm going to start diving lower and lower in time frames, okay? This is a massively bullish formation here forming on the weekly. This is a broadening descending wedge, and all of you know when I speak of the golden rule of 3, we get 3 settles of the resistance followed by a large capitulation event, and then we get our true breakout on either test number 4 or a test number 5, right? So that is very much consistent to what's happening right now. Another thing to notice here is that this is a buy formation breakout. Okay, please notice that we have a falling wedge. The falling wedge is absolutely a bullish formation paired with now a bullish formation known as that broadening descending wedge. The broadening descending wedge does have a target of about 238. I'm not saying we're going there. I'm just saying that this is how the playbook states to trade a broadening descending wedge. Now, the triangle also has its own way of trading it too. Please go ahead and we have like 3 sets of bulls here, but we're going to go over 2 of them, right? So first of all, the area of breakout. Let's just say that we were to break out here, like let's just say in 2 weeks, right? Let's just say we were to break out in 2 weeks, and we can take a trend line from the top of the triangle to the bottom, apply it to the top, and that gives us a target that's very confluent with the knot 618 at 1405, almost exactly, right? The target is coming out to 1473. Okay, now the second set of bulls, which is the primary bulls, usually we tend to get, they tend to take a trend line from the top side of the triangle all the way to the bottom side of the triangle to where this would meet, right? It's approximately there. So we can apply it to that area of breakout too, right? And that takes us to about 39 53, and also to the resistance of our broadening descending wedge. Very curious that it would do that in the first place. Very nice. Okay, now as far as breaking out towards the center, okay, we can just go over it real quick. From the middle of the triangle is the other set of bulls, okay? So let me get the magnet away from here because I really do need this thing to kind of concentrate the way I need it to concentrate. Okay, so now we can apply this to that area of breakout 2. My goodness in heaven. Where is it? Here it is. There we go. Okay, so we apply it to that area of breakout, and let's just go ahead and see where this takes us. Okay, so this will take us to around 21.29. Okay, so that's very good. Now, if we go back to our 6-hour volatility backtest, it's taking us to about, remember, the space between 1507 and about 1650, right? So 1507 is already critically close to the 1473 that we're getting from the breakout. Nice. We're already getting confluence. Okay, next chart, and we're getting very close to the end. Here is another thing to kind of take a very quick look at. If we do face that upside from the 6-hour, the statistical upside from the 6-hour, that would tell us that we are getting ready for a fourth test of a true breakout here. We have that test number 1, 2, and 3 capitulation event. We have that test number 4 coming up right here to break out of this 12-hour channel, and that would in essence take us to that 1687 matched at that 4 spot 618, and then we could come back and validate this as a current area of support before continuing on to the upside. Okay, now the 8-hour time frame RSI. Notice how we have 1, 2, 3, and honestly, there are more drives that I didn't draw here, but these are 3 drives of primary hidden bullish divergence located on a very high time frame, right? I would consider this to be the minimum time frame to look at your divergence drives. Okay, so please notice here that I would like a little more validation, but it is pitched to the upside. That would then constitute with drives of hidden bullish divergence. I'm liking what I'm seeing here, you guys. Okay, so now let's look at overall what it's kind of looking like for us, right? So 30-minute immediate short-term time frame, just like we always look at, right? A little bit of consolidation here, getting very close to that bullish control zone, but we really want to make sure that we can actually start getting the shorter time frames all collapsing into each other, right? So in this case, the 30-minute may have already collapsed into the 4-hour, which is now pivoted towards that upside. Nice hint from that RSI signal, I'm sorry, from the 14-day simple moving average, right, to the upside, RSI signal to the upside as well. The 8-hour time frame we already spoke of with massive amounts of hidden bullish divergences, and this is the daily time frame. Okay, the daily time frame appears to be waiting for the shorter time frame influence. Okay, so this is why I'm saying that we want the shorter time frames to collapse into each other, and I believe that the 6-hour time frame volatility versus momentum that we took a look at right over here with a 90% upside, this could be the start of that collapsing of every single time frame RSI until it leads all the way up to the 5-day time frame with an upside pivot. Okay, you guys, so I'm sorry that I'm not actually being very elaborate with the targets that we're going to, right? But what I can notice here is that there is massive upside to look at for ticker symbol VOCL, as it did immediately catch my attention when I restarted the different outlook on the thread of analysis that I put together. Okay, you guys, so this goes to my VOCL community. I hope that you did watch all the way. I actually I feel for you guys, right? So I try to put together as the most comprehensive type of analysis here for you guys, both including the macro and the immediate short-term time frame. Okay, you guys, so it's looking pretty good. Just know for a fact that this is not this anything can invalidate what I just said. Okay, you guys, this is just statistics. They are not certainties. Okay, you guys, but I need you to remember first and foremost that I am not your financial advisor or anyone's financial advisor. I need you to do your own due diligence and everything will be cool. Okay, you guys, definitely cannot suggest for you to buy or sell or hold any asset whatsoever, ever, never. Okay, you guys, but I do wish you a very good and very happy Mother's Day to you guys, for all the mothers that are still presently here for us and in the heavens. Okay, you guys, but I wish you well. I wish you the best, and I will catch you at the bell mañana. Adios.